All right, it's Friday, October 25th, 2019. I'm going to go over my trades today, and, well, one trade. And I also wanted to look at this PCG, which was a trade I didn't take, which I'm very upset about. I almost took in the pre-market, and I'll show you on the 1 minute chart because it shows where I would have taken it. So I looked at it quickly, early this morning. It was at 7 o'clock that it started getting volume. And if you look at you could see that this is the one out in California, all those fires, it's having problems. I couldn't pull the trigger, so it gapped down in the pre-market. So that right then and there, I said, well, this is probably going to make for sure. I doubt this is a gap down and pop kind of situation because of just the bad news that's been floating around this stock. So I watched it here. I couldn't really pull a trigger. Topping tail here. But this is where it started getting nice and smooth, and this is when I first started noticing it, really. And I almost took a trade right here. I think it was at 742. I said, I'll get in here at 742, take it at around 640-ish, I guess, 639, and put a stop probably above this little level right here where it kind of dipped and then kind of made a shelf. So not even like 15 cents, maybe like 12 cents, really. And I didn't do it, and then you could see what it did the rest of the morning. Oh boy, look at this! From 639 all the way down to about 488. So it was a monster drop, monster drop. Now you would have had to have withstood these topping tails, but as long as you didn't have an automatic stop in, you probably were fine. Even with that, it's not necessarily guaranteed that when it spikes like this, it's going to fill you on a stop. But you just don't know. So that was a miss. I've really been looking for trades like this in the pre-market, ones that are moving nice and smoothly with the 8 EMA. And also in the pre-market, this uptick rule doesn't apply. So you can get filled a lot easier in the pre-market on stocks like this that have gapped down or don't have the uptick rule in play yet. And that was another reason why I was thinking definitely of getting in, because I knew I could get filled. You don't have to worry about that uptick rule, but I just couldn't do it. I took one trade though today, and I was happy with it. It kind of made me feel better about missing out on PCG short, and that was Twitter. The reason I was watching Twitter was because of yesterday. It gapped down. I think it had earnings yesterday. So zoom in on this one. So it gapped down a lot yesterday and then continued to fall. So it gapped through the 200 moving average. It didn't recover. A lot of times when stocks gap down through the 200 moving average, unless there's a really lot of bad news associated with it, it'll start to make its way back up. It kind of acts like a magnet. Not all the time, obviously, but it's something to look for. This was kind of a flat 200 moving average, though. So when you break through a flat 200 moving average, you tend to get more run from it for some reason. I'm not 100% sure. I just remember hearing that from a more experienced trader. So I was watching it, and it dropped a lot. I wish I had gotten it here where it had a 2-bar pullback right here early in the day. Big drop down, then pulled back, and then drop again. This is where you could have gotten in at 30.49, where it rejected VWAP too. And you can see that on the VWAP chart. Down, topping tail here, couldn't break through VWAP, and then a big red candle here. So you could have gotten in at 30.53 and ridden it down to about $30, so over 50 cents really. But then it had this little double bottom here. You see this little pop up and then drop again, then pop up again. And that really made me take notice, because a double bottom with a cross, an 8 EMA and a 20 SMA cross, the 8 crossing over the 20, and a VWAP break. So it had so many things working for it that got me interested. So this break of VWAP right here, and then I saw this little bottoming tail on this red candle, which meant sellers tried to bring it back down to VWAP, but it came back up, so it was holding VWAP. And it's not that clean. And normally I wouldn't have taken it, but with a double bottom here, a cross of the 8 and 20, and a cross of VWAP, so many signals just indicating trade. So, but mainly VWAP. This is the kind of trade where I made a scan not too long ago, and I think I sent it to somebody out there who asked for it. I made a scan that looked for stocks that were down on the day and then making their way back up through VWAP, because VWAP is such an important moving average to use for day trading. And I just abandoned it. I still have it. I haven't loaded it into my trade ideas main page lately, just because the problem with it was that it was loading so many alerts that I had to weed through too many that would technically qualify given the criteria, but they would be like so messy that it wasn't exactly the kind of alert you would ever trade. So I had to weed through a lot of those in order to get to ones like this, where it was a noticeable pattern and nice, a cleaner move, and so it was tough to really keep that up on my alert list page, because it was just too much work to go through all those ones that don't qualify. So I started to really like fine tune the kind of trades I'm looking for. So I still look for this pattern, and it pops up in other alerts that I have. So when I see it, it's an added reason to maybe get into a trade. But I don't have that scan. I don't use that scan as much anymore. I might go back to it and maybe kind of adjust it a little bit to look just for stocks that have gapped on the day. Of course, this wouldn't qualify because there was no gap. Or stocks that have like a tremendous amount of more volume than normal, something like that. But I'm just not using that scan anymore. So anyway, crossed. So once it held that little bottoming tail here, it got me in. I said I'm gonna get in, and I got in at 30. I actually scaled in. I normally don't do that. I took a certain amount of shares here at 30.32, and then I got filled again at 30.32 and a half. So it was. And I took, basically, I didn't even get half my shares at first. I got a little less than half of what I was normally going to trade. And then I took a lot more here. And then I got rewarded with this big green pop. So I took some out right away. I took some out within, let's see, I got in at 11:38 and 11:40 were my two entries. And I took some out at 11:44. Less than 5 minutes, I took some out here. Now you can see this line here is my 2-to-1 reward to risk ratio, so it's twice what my stop would be. So I put my stop at 21, which means I want it to go up twice as much as the distance from my stop, which is 30.57. And I took some out early here because of this pop. See, if it had moved up a little more gradually, I probably wouldn't have taken profits right away at that level. I probably would have held on, maybe moved my stop up a little bit. But when you see this kind of pop, it just makes you nervous that it's going to come crashing down. And in a way, it eventually did. It popped, kind of held, and then popped again, and then a big red bar here. And so you never know if that means that it's just going to start failing again for the rest of the day, or if it's just going to regress to a moving average and continue. Now here you can see it regressed to the 8 EMA, and then held it and started moving back up. So now it's right back to my first target again. So I can't be too upset about it, but I've been doing this a lot. I've been having just if that fear factor kicks in, you're worried that it's just going to, this red bar is going to continue even longer. You know, it's just going to, this signals a downtrend, and you're not going to take any profits. So when I took out here, I only took out about a third of my shares here, and I took the remaining shares out here, and I didn't even take them out at my first target. So it was kind of, you know, the old saying, let your winning trades run. It's been tough for me to do that, especially since I've been having trades that are just flat or losing trades. Like yesterday, I didn't make a video. I'll show you a trade I took yesterday that was a losing trade, and you just feel like coming off a losing trade, you just want to take profits because whenever you can, because you're worried about it becoming a losing trade, and that's something you have to get better at. I know I'm still struggling with that as a trader. I just don't always have the confidence in my trading plan to just let a trade run. Now look what it's doing. It might even hit my 3R. And then it might get back to the close of yesterday, which is around 30.75. But I got out a little early, made money, but I got out a little early and could have made a little bit more if I held on to some of my shares. But so that's something. It's definitely the mental factor of day trading. Is just it can't be described to somebody that hasn't done it yet. You don't know until you've gotten into day trading what that mental framework is like and how it can affect the way you trade. And it's all emotion based. It's like fear, greed, it all factors in. But I'm still happy with this because really, I probably would have done this the same no matter what, just because of this pop here and then this pop here. It's just moving too quickly away from the 8 EMA for my comfort, and then and then it did drop down. So right away when I saw this red bar, I was like, oh, I did the right thing. Now I'm watching it move back up again. I'm like, oh, maybe I didn't do the right thing. Could have gotten back in. Could have taken some of the money I made and bought half the amount of shares and seen what happens. You know, that's the thing about day trading. You can always get back into a stock. If you get out, you can always get back in. Because if a stock's going to run, you know, it doesn't matter if you got back in here at 30.42 or you got here at 30.54. If it's going up to 31, it's almost negligible what level you get into around here if it's going to move up a ton more. So things to learn as you start to get better at day trading. As you make mistakes, you learn from them. So let me show you the stock I traded yesterday. I'll go back 2 days. I traded PCG actually yesterday. That's probably another reason why I did not get into it today in the pre-market, is because I was a little shell shocked from yesterday where I made a bad trade, and you could see the bad trade right here. I got in, so it had gapped down like on the yearly. It gapped down a little bit from this level. This is way too far out. So it had moved up 3 days ago, and then it gapped down. Not as much of a gap as today, but it gapped down to here. And so I got in when I thought it was going to hit its head on this 8 EMA. And of course, I didn't really factor in this little indecision doji right here at 10.15, and it kind of moved up off of that. So I got in a short right here at about 7.42, and right away 3 green bars got me out. I got out at 7.52, tight stop, 10 cents. I've seen this kind of trade where it gaps down and then it kind of fails. I was expecting that, but the pattern was not actually indicating that. So that was just a bad trade on my part for basically jumping in when I did. I should have waited for the 8 EMA to confirm that it was going to be used as resistance, so it wouldn't move up. Right here, it went right through it, and then it used it as support and moved up a little. Eventually, it failed it. This cross down here is where I should have been watching. I have trouble getting back into stocks that I've already lost money on. I don't know why. It's hard. I got to get over that. But here, you could have gotten in here when it failed the 8 EMA again. 8 crossed back over the 20. Could have gotten in at 7.51, ridden it down to 7.23. You know, about 30 cents almost. Could have done that. But yeah, this was a bad trade. So coming off of this bad trade today, I just, you know, I wasn't ready to hold on to my shares to see no, it's like it's failing that again. And this looks more to me like it's gonna end up failing the rest of the day, just because it's had 2 little topping points here. It had a little double bottom here, and now it has like a top here. If this candle holds, I feel like this could end up crossing again down, but you never know. I'd love to see it continue moving up, just to know that I was right in taking it when I did. It would hurt knowing I could have made more money off, but just, you know, trying to get my day trading win ratio up gives me more confidence when I enter future trades. So that's it. Twitter was the only one that I traded today. It was a good trade. Could have been better. It can always be better, really, but you know, I was happy with it. So that's it. PCG is probably moving back. I think I just clicked on it, so it's moving back up, I think. And then it failed. Yeah, so it might be crossing here. You'll see 8 and 20 cross. Might be a time to get in. You can see it hasn't crossed the VWAP yet, so gotta wait for that VWAP to cross. If it does cross there, you can see how it failed once. This would be the second cross of VWAP. That could be definitely important. But that's it. I think I'm done. It's Friday. I don't want to risk losing anything that I gained today. So I'm done for the day. Hope you all had a good Friday, and I will see you next time.